So just imagine this. You saved up your money over 2 decades, 3 decades. You've got enough money in the bank to where you can do things that other people can't do. And one of those things you decided that you wanted to do was buy a Demon 170 the second it came out. You wanted to be one of the first people to be able to ride around in that thing and flex and sit it in your garage, put virtually no miles on it, but tell everybody that you've got a Demon 170. And you were worried that these things would all sell out and you would never get another one again. They would be so exclusive, so rare that you would lose $300,000 or $400,000 in future appreciation if you didn't buy that car now for whatever ridiculously stupid price the dealership appended to it. Or you bought it from a flipper who raised the price tremendously, and you thought still that you had an opportunity to still make money on that car and own what would be a history-making, a historic automobile in the last days of gas engines. Only to find out now that those days aren't the last days, and gas engines are making a roaring, insane, ridiculous, and awesome comeback, and EVs are not what everybody wants, and now you've got a Demon 170, which is still a spectacular car, but turned out to have, in let's call it, so far, rare cases, only because we don't know what other cars are going to have these issues because so many people are not driving them. There are serious engine problems, and there are legitimate engine shortages based on the interview I did just about a month or so ago with a Demon 170 owner that's been waiting well over 6 months to get an engine and was told back order, none available, only to finally, after we did the video, they caved in and just bought his car back. But all that, those issues certainly exist, and there are plenty valid reasons to kick yourself if you paid $250,000 for one of these things, or $200,000 or $150,000 or $180,000, anything over MSRP. But I get that was the market. If you wanted one, you were going to have to pay that because there were other ding-dongs out there more than willing to pay it, which created a market that, frankly, I don't believe really existed in logical reality, nor is there a giant appreciation opportunity coming in one of these cars because of the amount of people that were sitting on them speculating and putting no miles on them, creating a situation where these were not rare vehicles and likely will never be rare vehicles because so many were not used, were not driven, were not wrecked, were not crashed, except for one. And one that I know of for sure, which brings me to the topic of this video, which is a gentleman in one of the forums, and I'm going to put this up on the screen, posted this. And I thought, this is worth doing a video about because it's what people don't think about when they buy these cars. For example, the ZR1 coming out, even the Z06s, even the first run of the C8s, when they were marked up so incredibly high and people really believed that these cars were going to appreciate in value. And let's just say the people who believed the initial C8s were going to go up in value, they deserve special dunce caps for that idiocy. But the Z06 people, maybe not as stupid, but most certainly stupid, knowing that a Chevy is probably something they're going to build a lot of, which they did, and now you can get those things for much less money. But now with the ZR1 coming out, the whole issue is repeating itself, and that's the same thing that happened with the Demon 170, and dealers are wanting enormous markups. But what these guys aren't thinking about when they buy these cars is that here's what they literally do. So many of them, if not most of them, will go to their current car insurance company, whether it be Progressive, State Farm, Geico, whatever it is, and they will give the VIN number of the car, and it will come up as, for example, the Demon 170 comes up as a Hellcat Red Eye. It's what it shows up with the VIN number. Then you've got to explain to them, well, it's a Demon 170, and they go, yeah, whatever, I don't care. But no, it's a very special car. I just paid $200,000 for it. Okay, I don't care. Your insurance is going to be, let's just say, I don't know, $600 extra a month on top of your existing insurance because it's a high-performance vehicle. And you go, okay, well, done. Here's my VIN number. Now you're glad you've got insurance. You can go drive that car. Remember, you paid let's just say $200,000 for that thing, and you were convinced that it was going to go to $500,000. So you believed you bought a collector car. The mistake you made, and the mistake this man made on this post, let me read it to you. Sadly, Progressive decided to total my Demon after I ran over a piece of metal in the road, puncturing the floorboard, but they only valued the car at $106,000. It was barely over 1,000 miles. How do I fight this? Well, we'll talk about that in a minute, but the biggest point I want to make here is he went to Progressive, which is okay. Progressive does have collector car insurance, and they also do have the agreed value insurance. But after having owned a few collector cars over the years, I owned a very old Rolls Royce that was nearly impossible to insure, so we had to do an agreed value policy on that car. That way I knew that they weren't going to come back and offer me $2,000 if it was totaled somehow. And then I had a 1964 Cadillac Coupe de Ville convertible, which was amazing, awesome, and a freaking nightmare to own. But I had it for like 2 years, and when I got the insurance on it, I got the agreed value insurance because I knew that at that point I had paid like $18,000 for it. I knew a couple things. I knew there was a good chance, one, if I totaled that car, they would offer me half or less what it's worth because the comps out there for what these cars were going for back then were $5,000 for a massive fixer-upper all the way to $40,000 for a cherried out car. Mine was in really good condition. I mean, it wasn't show quality, but it was fairly well restored. And I knew that there's a good chance I'm going to be fighting with them if I get into an accident. The other issue was it's clear that these things were still on the appreciation curve. They were going up in value. And for that reason, I wanted to make sure that I could at least get what I paid for it, maybe a little bit more. And that entailed getting an appraisal and going through some hoops to be able to get that insurance. I learned that when that happened. Then, when I got my Demon 170, I paid sticker for that car. And because I paid sticker for that car, I was okay with taking the chance with my insurance company. But I do pay extra on, I believe it's it's USAA. There is an opportunity for me to pay, which I do, for an additional 20% of payout in the event that the car is totaled. So I knew that no matter what, I was going to be okay at that price based on all the comparables out there of ding-a-lings paying $250,000 on that car. So I didn't need to go to Hagerty or any of these Grundy or American Collectors insurance companies. I didn't have to do that. I knew that I would be okay on that car. But so many of these other guys went out there and just stuck it on their normal insurance. And now, like this gentleman who had a problem, and I don't want to call it an accident. I guess it's an accident. Something busted through his floorboard, and for that reason, they're totaling the car. He's got two problems. One, based on the insurance company's perception and belief of the value of that, what they think is probably a Hellcat red eye, they think that if it's going to cost $50,000 a fix, they're going to total the car. But if they really knew the actual value of that car, let's just say today it's $135,000, $140,000, maybe they would fix it. But does he want it fixed? That's the problem. Now you're going to have a car with a really bad Carfax that's already depreciating rapidly in value that you way overpaid for. So his problem is, yes, he wants it totaled. He doesn't want to have a car with a bad Carfax, but he wants to get paid out what he paid for that car. Well, those days are long gone. He should have done an agreed value policy, and at that point, he would have had to have appraisals and have mileage restrictions, garaging restrictions, and all kinds of stuff. But it's something that had he asked the Progressive rep, they would have stuck him directly with their Hagerty collector car department, which they do offer. They have that. But he didn't say it. And the person on the phone or even through the app or online, when you're adding that VIN number, they're not going to tell you, hey, did you pay $250,000 for this, what you believe is going to be low production, limited collector car? Nobody's going to say that. So in his case, he's getting offered $106,000 and he's got to go holy war with his insurance company to try to get paid out. And I can tell you, you're fighting against City Hall here. You're fighting against a multi-billion-dollar company who's, can drag you out forever. And if you have a loan on that car, you're going to continue to pay for that thing until you get this thing resolved with the insurance company. And $106,000, if he did take a loan, probably the loan's much more than that. If he paid cash for it, he's just out a massive amount of cash until they can agree on the value of that car. But how can he fight this? Well, I went ahead and did the research, but I have experience in doing this because I've had a few accidents in my time where I had to go to war with the insurance company. In my case, it was with, I think it was Farmers Insurance on a BMW convertible that I had bought for a low price. And it was a screaming deal. Today, that car is worth, in the condition I had it in, probably, $25,000. It was so nice. But nonetheless, I didn't know anything back then. Bought it for $9,300. The insurance company came in when it was totaled, and my girlfriend, I let her drive it, and she spun it around in circles on the freeway right in front of me. Thank goodness she was okay, but that was the end of that car. And the insurance company offered me, I think it was $8,700 or something like that. Well, of course, I just paid like 4 or 5 months before $9,300. Well, I went to war with them, and I ran tons of comparables, and I made a demand. And that leads me to these points I'm going to put up on the screen. 1, if you're in this situation, you never accept the first offer. You gather the documentation on your car and anything that you've done to that thing, including upgrades, any additional wheels, anything, and have all the receipts included. You're going to do comparable sales. You're going to show the MSRP compared to those comparable sales, and tons of photos and records of your car showing how perfect it was when you had it. Then you're going to submit a demand with all of your proof. Now, when I did this on that BMW, I submitted a demand along with all of the proof, and that made it easy for the insurance company adjuster or representative to make a decision based on yes or no, rather than argue if I just said, I want this much. What too many people do in this situation is they'll come back and say, no, comps are between $150,000 and $250,000. You owe me more money. And they don't know what they're going to come back and offer you. So they say, no, we're not going to give you any more. But if you make a demand that's within your policy limits, of course, then at that point, and I'm no lawyer, if they say no and you take them to court, they could be responsible for all of your attorney's fees. And I'll check with an attorney on this. There's also mediation clauses and arbitration clauses and appraisal requirements that you both can agree to have an appraisal and then let the appraisers fight it out, which one's right, and then come up with an agreement. It doesn't matter what you do in this situation. You're going to get brain damage. It's going to take a long time, and you're likely to come out not whole from the experience because the insurance company is just going to work you over. But make the demand. And when I made the demand that I wanted my full $9,344 back, they just came back and said, okay, fine. They weren't going to fight me anymore. My comparables were sound. All the active listings on the market were sound. And then what I could dig up for closed comparables, which is hard with cars, was good enough. I even made phone calls to people to find out what they sold their cars for and provided the phone numbers of the people who had the ads, who sold the cars, that they can call them up and ask them what they sold them for. I mean, I went very thorough and got them to pay. But you've got to be willing to go through this and make the demand a specific number. Because I can tell you, even in business myself, when somebody makes a specific demand on a number, then it's a simple yes or no. If it's or a counter, that's the easiest way. Yes, no, or how about we do this? But if I have no idea what your demand is and you're just screaming because you're not getting enough, in my world, that's hard. In anybody's world, that's hard. In the insurance company world, that's hard. And if they've got a lot of files on their desk and they expect they're going to have to pay you more anyways, they might just go, well, he's asking for $135. We offered him $106. The comparables look sound. This is going to be hard to lose or hard to win in court or in mediation. Counter him back at $130 and let's call it a day. It makes it a little bit easier to fight through that. But in the end, yes, you can file complaints with the state. You can have an attorney sue for you and all that stuff, but that's just more money, more good money after bad that you're throwing at this thing. So be careful when you buy these ZR1s or these Demon 170s or any of these cars that are, even if you bought a used Demon 170 today, you're not going to go insure it directly through your normal daily driver car insurance. You need to call companies like Hagerty and others and ask them about the agreed value policy. There's nothing else you should accept on that. It's going to cost you more money, but you got to pay to play. And at the very least, if something bad happens, you're going to get paid out on that car. So that's the info I thought I'd share today. It's a whole new level of insanity when you dramatically overpay for something you believe is going to be a collector someday, and at the very least try to protect yourself. And there's no guarantee the insurance company wants anything to do with it either. They may even look at it and say, that car, we're not even, if you want to insure it under this, it's going to cost you, $5,000 a month. And at that point, you're like, well, this makes no sense. I'm going to go ahead and roll the dice and just be careful with your car. Also, if you track the car, they're probably not going to cover you on the track. You need to buy track insurance. All these things are things that people don't think about until something goes sideways. So with that said, everybody, let me know your thoughts in the comment section below. Do you think this guy deserves what he gets for buying a car for way more than he should have paid for it, which is likely what happened, and now not knowing and not realizing you need to get a better insurance policy when you're going to do something like that? Or is it just part of the whole scam that everybody had to deal with out there with these stupid cars? With that said, please like, subscribe, comment, and I will see you all in the next one. Bye-bye.